my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A bearish dark cloud cover pattern yesterday after Friday's bullish engulfing pattern that was capped by the broken May-based downtrend, currently 10.055, and held up by the trio of 2011 supports formed of the March high at 99.99, the April high at 99.47, and the July high at 99.07. These supports were stronger than back in May, not now, when they conspired not only to mess up the market but really mess it up. Anyway, the market closed down well within this trio, just over the April 2011 high. Okay, time to look at the bigger picture, which is more interesting anyhow. Okay, so I had been talking recently about a possible pennant formed within the last few weeks. The topside trend line is made of the adjusted May-based broken downtrend, whilst the lower trend line had been made up from the lower time of a recently drawn, now busted and retired April to May bullish shift pitchfork. Anyway, this pennant had morphed into a possible triangle, and most recently into a possible descending triangle, with a base at about 9800. Now this pattern is still on, and we are currently seeing the market working its way through it. Assuming this will work its way through during the next week or so to the end, then we could have a potential downside target X in the 94.40 area. Now descending triangles can break either way, but as we haven't broken upwards, I haven't marked an upside target as yet. However, I can give an idea of the size of the move. Upwards would be about $465, so if the break upwards was from today, it would be in the 10,520 area. Now so far today, a brilliant break lower, triggering the idea for a move lower from the recent descending triangle. Market punched down through the trio of supports, the base of the descending triangle at 9800, and even as far as just below the Fibonacci congestion February high area around about 95.85 to 96.19, halting within it for now. This now highlights the target X in the 94.40 area. LME 3-month aluminium. A bullish white soldier yesterday, a limited follow-on, it has to be said, to the previous session's shooting star pattern, the unusual type 2 bullish variety. This comes on the back of last Thursday's combined key reversal up and bull hammer pattern. The market also managed to move up and close over two close congestion lines at 24.68 and 24.78. Overall, we're still in between the lower time, currently 24.03, and the middle time, currently 25.87, of the early March to late May bullish Andrews pitchfork. So far today, a significant move lower, down through the two close by congestion lines and down to the testing the broken upper bull channel line from March, currently at 24.44. But also I suspect the flatlining short moving average, currently 24.40. We've gone no further lower than that as yet. I suspect the action from May to date may be turning into a triangle, but as to whether sideways, descending or rising, and also whether it's bullish or bearish, well, that's not clear yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.